Welcome to the IRS Solution Attorney Show. If you have problems with the IRS, don't focus on the negative, focus on the solutions. With the IRS Solution Attorney, Darrin T. Mish. For over 15 years, he's been helping taxpayers with IRS problems reclaim their lives and their financial stability. Now, here's your host of the IRS Solution Attorney Show, Darrin T. Mish.
Good morning. That would be me. Well, and welcome to the IRS Solution Attorney Show. I am the IRS Solution Attorney, Darrin T. Mish.
And I'm your co-host, Katrina Madewell. The music's a little long and rogue in the background this morning.
That's what happens when your producer is talking to somebody else instead of paying attention.
And as he waves us by, like, carry on. Carry on.
Move right along, people.
So I know we love to talk about the weather, but man, it was a breeze to drive here this morning because everybody's on spring break, so the roads were super clear.
Oh, is that why it was so good?
Yes, and I had ice all over my windshield.
So I woke up in Zephyr Hills, Florida, and it was about 34 degrees. Got down to 32 on the drive here, and then I got here and I got inside, which is the bottom line.
Maybe it was colder where I was at because I know I had to wait for like 10 minutes.
It was kind of breezy, so it was, there was a wind chill, actually. Believe it or not. And we live right on a lake, and the wind was blowing off the lake, and it was cold. Very cold. But I did not have ice on my windshield like you did.
Florida version of cold anyway.
And I don't know what is up with March 16th, and we got a cold front. But that's it. That is the last cold front of the season, for sure.
There's something else we should say, because it's March 16th.
Which means if you didn't file an extension for your corporate or partnership tax returns yesterday, you're out of
late.
luck.
You're late. For a very important date, you're late.
Yeah. If you didn't file that, then you've got a problem.
I was telling Darrin, I'm so happy I actually have mine done.
Remember, the late filing penalty for a corporate or partnership return is $395 per month or portion of a month per shareholder.
Or they could have filed an extension, right? And not had that?
Like I did. I filed 4 extensions. And while I was at it, I was like, I'm going to file that 1040 extension while I'm at it. Just in case I can't get it done by April the 17th this year.
Oh, yes, that's right. You got some extra days. But don't think you have extra days because then you'll run out of time. That's how it works.
Yeah, exactly. So today I thought we'd talk about, we do a breakdown of the IRS collection process. We haven't done that in a while. So we could talk about, well, what happens if if you're going to file a return this year, or maybe you filed many returns in the past with big balances due and you still owe the IRS. What's going to happen? How does that work procedurally? And what can the IRS do and what can't they do? Does that make sense?
So is the collection process, does it vary depending on the type of tax you owe? Or is it all pretty much the same? Not
too much. It's pretty much the same. There are some, I would say payroll tax is more serious than, income tax, although the process is generally the same. You have generally the same rights. There's some variations, but no, it doesn't really matter that much.
And it's more serious for the payroll because theoretically you're holding half of someone's money that you should have already paid to the IRS, right? We
haven't done an entire show on payroll for a while because it's just not that interesting. It's just really complicated and there's just lots of moving parts. But yeah, for sure, if you're the employer and you're not remitting the payroll taxes, in a sense, that is stealing. It's theft and it's bad. And you can go to jail. We don't talk about jail very often on this program, but you can go to jail for the failure to pay payroll tax, depending on how much money we're talking about and how often you've done this in your life. And
if it's blatant, right? They look at that?
Yeah. All the cases that I've seen, just the media type cases that I've seen about payroll taxes and the failure to pay those, the people that have gone to prison or been prosecuted have been, repeat offenders and or just really blatant. Like, I'll give you an example that comes to mind. A guy in the Midwest owned a chain of restaurants, and instead of paying the payroll taxes, he went out and bought boats and fast cars and big mansions and things like that.
My kind of guy.
Yeah, he's probably
not the IRS's kind of guy.
Yeah, I'm going to suggest he's probably going through a midlife crisis kind of thing or something like that, and the IRS really looked dimly on that.
The running joke is like anybody, 40s-ish, 50s, they buy a Corvette, midlife crisis.
Yeah, that's actually the reason why I won't buy a Corvette.
That's what I told my husband. He wouldn't buy a Corvette. I was like, you're not buying a Corvette.
So I may or may not drive a really large pickup, and that's my version of a midlife crisis. But,
it's way better than a Corvette, I think.
Well, actually, it has a lot more uses. We haven't talked about the farm in a while. So last weekend, I just had a hankering to do some farm work. And so remember, I have that big orange orchard that's pretty much dead. And I need to clear the orange trees out because I want to turn it into just a hayfield, for cattle or whatnot. And so I chained my pickup truck up to some orange trees for fun.
No, you did not.
And I ripped them out by the trunk, roots and all. And I have to tell you, because I'd seen people do it. I didn't really know. I've never done it myself. And I have to tell you, I let out like a primal scream after the first one came out. I was like, yes, I'm victorious.
Oh my gosh.
Now, let me guess. I bet you drive a Ford.
Well, is there any other kind of pickup truck?
No.
Yeah. Okay. So yeah, I do drive a Ford.
See, I knew that would yank it out of there.
What are you
Super
talking
Duty.
about? You drive a Ford too.
That's why I drive a Ford.
Exactly.
Built tough.
Yeah. I don't know if a 150 would do it. Maybe.
Maybe. You
But,
do some of it.
Mm-hmm. Well, and even with the Super Duty, it's not like one yank. It's like 4 yanks. And then on the 4th one, it just literally flies out of
Well,
the
those orange
big is
trees have
that-
been there a while.
How
Yeah.
big is that tree?
Oh, they were big. They're mature. I would say the average trunk diameter is probably 8 inches. They're big trees.
So when Darren's not battling the IRS, this is what he does. He roams around the farm and he yanks out orange trees with his F-350?
Yeah, it's a
350?
350.
I don't even know.
Yeah, it's a
with his
350.
big white redneck truck. Anyway.
I think she might have just insinuated I was a redneck of sorts. I'm a very complex
little.
man.
He doesn't look like a redneck. If you were to see him, we're Facebook streaming live so you can see him. Hop on over to Darrin
Oh, he
Mish's
does not
page.
look like a guy that
He
would be in a
doesn't.
Ford
He-
pickup truck.
He
yanking
does not
grapefruit
look
and
like
orange
this
trees.
this redneck attorney. Because sometimes he wears boots, but for the most part, he's always kind of dressed to the nines.
He's got
boots on
cufflinks
today.
on all the time.
Yeah, and he's got cufflinks.
What
always.
farmer wears cufflinks?
Look, and Heather's got his shirt pressed all nice, so he dresses sharp. Like he's dressed like he could go to court.
He dresses like he's still got California in him.
Yeah, he does. He does.
Like I said, I'm a complex guy. Wear a cowboy hat on occasion, not that often.
Yeah.
Just can't get used to it. It's too hot here.
And he's also the kind of guy, for the listeners to know, that he said that on spring break he's going to go to the Keys. And I said, Key West, no, that's not really family oriented. I'm going to go up in Marathon where we're going to snorkel and we're going to swim and we're going to scuba dive with the kids.
The deer, you can feed them out of your hand. They're so domesticated.
Oh, he'll probably do that. So yeah, I feed another kind of deer in Key West out of my hands.
I bet you do. I bet you do. All right, let's hop back to our topic so we can give our listeners that want to hear about this stuff a little bit of value today.
We just did. We let the listeners know what kind of guy they're listening to. That was
They
valuable.
did, yes. He's, if you had to hire Darrin to help you with an IRS issue, I would tell you that he's very laid back. He'll make
And
you
you'd
feel
be in
comfortable.
great hands, and you would leave him as a friend, like a lot of his clients do.
I think so,
They
too.
become friends.
And Darrin, he doesn't say this every week, but I can tell you for sure because I've known him long enough and we've been hosting the show together long enough. He does not like repeat business.
No, I actually don't.
How often have you heard that?
If I fix a client's big tax mess, the goal is to fix them pretty much for life. I will take repeat business, but if they just did the same thing over again, then it's really kind of demoralizing. You know? You kind of get one shot at this. If like the train wreck of the week this week, I saved the gentleman a lot of money. If he comes back in a couple of years with the same behavior, the same situation, it's not
would you
gonna
feel
be-
like you failed him or like you didn't do him just or teach him or explain,
what?
made it too easy? I don't know.
I would probably internally feel like I failed him, but in reality, he failed himself.
It's on him, yeah.
He failed himself for sure. So let's talk about real quick about how the IRS collection process works. Basically, if you don't pay your tax in full when you file your tax return, you're going to get a bill, right, with the amount that you owe, with some penalties and interest, and that's actually a demand, and you have 10 days to pay that bill. And this is sort of an interesting tidbit that if you go to day 11, then something called an invisible silent federal tax lien attaches to you and attaches to all of your property.
Wait, invisible silent tax lien? Is that what you just said?
Yeah, it's actually an invisible tax lien. It does attach, and for certain court procedures and whatnot, the tax then takes higher priority over most other debts that you would owe. Not secured debts, but unsecured debts.
And is this like if they file bankruptcy or something, or like I don't understand this?
Yeah, it's hard to explain in the time that we have allotted, but it's like an invisible lien after day 10. So they have to give you notice and demand 10 days, and then after that it becomes a more serious situation. So the bill,
because of the timing, we should bring up one more thing before we jump into the collection process. Sure. Is if you owe money, at least file your returns on time because that's going to save you some money, right? At least get them filed even if you don't pay it.
Yeah, I would say if this is a single year that you owe money and you don't owe a lot of money, then you're going to want to file on time. Now, it's hard to give individualized advice on the radio, right?
Correct,
So this is not individualized.
Everybody's scenario is different.
Yeah, this is not individualized, advice.
I feel like we
It's not
should be
legal advice
playing
at all.
some attorney jargon here.
Instead, we can
plays
just wait
the
for the
beginning.
break music, right?
Yes. That's one size doesn't fit all. You got to talk to Darrin to make sure your
So what I was going to
situation
say is,
safe.
if you owe a lot of money on a single year, you may want to come and talk to somebody that's professional, because it might be better to have a plan in place before you just file the return.
Right.
I see that mistake made a lot. Somebody owes $100,000 for 1 year, and they just file the return on time because they want to save the $500 or whatever for the late filing penalty. And what they don't realize is they're going to start this collection process rolling without a plan. That's bad.
See, I'm glad I brought it up, because then we got to talk about it. So if you have a tax issue, problem, or question, or you owe a lot of money in taxes, Darrin's your guy. You can get him at 888-GET-MISH. Again, that's 888-GET-MISH, and the numbers are...
888-438-6474. 888-438-6474.
You'd think I'd have that memorized by now, but I don't. We'll be back in just a moment. Stick around.
I really can't
But
stay.
baby, it's cold outside.
I've got to go
But
away.
baby, it's cold outside.
This evening has
Been
been
hoping that you
so
drop in.
very nice.
I'll hold your hands, they're just like
My
ice.
mother will start to
Beautiful. What's
Our northern listeners are probably laughing right now.
Yeah, they're not very happy with us, because some of them are actually snowed in, but we're complaining about it being 32 degrees when we wake up, and, it's what's the temperature now, Pat? 45?
43.
And I think the high today is going to be around 60, 65, something
Low to
like
mid
that.
60s.
I mean, you really can't complain about
Low to
that.
mid 60s.
And I saw tomorrow is like 75 to 77, something like that. So it's going to be
Then
real,
back in the 80s.
Yeah, it's going to be real nice again here real quick. So there's
This
not a
should
whole
be the
lot to
last
complain
cold
about.
spell, so we'll be able to jump into poo soon.
And we got to
Get in the poo.
wear
That
our
didn't sound like
jackets.
bull.
We get in the poo.
Oh, Pat.
He brings flavor and color.
Oh, he is so colorful, for sure.
So today we're talking about the IRS collection process and kind of giving you a breakdown of how it works. And in the first segment of the show, and we weren't talking about farm animals or whatever we were talking about, we
the weather.
got to the point where we were talking about, well, you get a notice and a bill and a demand to pay within 10 days. And then what happens? And you had asked the question, well, if you're going to owe, should you just file on time so that, you can minimize the penalties? Well,
Yes and no.
I am a lawyer, so it depends, right? So if you have an extension,
But
then
she doesn't usually give that answer, so I'm so proud of him. But that was totally an attorney answer.
if you have an extension, you're not going to get a late filing penalty, so you don't have to worry about that. But we have talked about on the show many times that if you don't pay your taxes by the due date, by April 15th or 17th, as in this year, then you're going to start having failure to pay penalties, right? Well, those are going to come up no matter what, unless you pay on April 15th.
Okay.
So I don't know about, you're going to definitely want to file on time. No, if you owe, I don't know about that advice as a general rule.
So I got a curious question for you, just because you're so knee deep in this particular line of work, and it's just curious, right? Because our whole administration's being reformed. So if you could revamp this process, what do you think would fix this? Them just taking a payment plan no matter what? What would your solution be if someone wants to file the taxes, but they can't afford that $100,000 bill?
Well, if I took off my
Take
lawyer
off your
hat
attorney
and put
hat that
on
represents
my-
people.
and put on my politician hat.
Yeah. What would you suggest? What do you think would fix this? Just kind of curious.
Well, when you mean fix it, you're talking about
because
collecting more money for the treasury?
example, if you owe $100,000 in taxes, using your scenario, and let's say they've got $1,000, that's all they have, but they file their returns on time, they pay the $1,000, they're still going to get stacked, right, for failure to pay that other balance, and they're going to get penalties and interest. And I'm thinking more along the lines of if you could freeze that penalties and interest, right? Because that $100,000 can grow to what? I mean, you've seen people have ridiculous tax bills.
Oh,
that
the
started
general
out.
rule is after a period of about 6 or 7 years, it doubles. So if you could owe,
So it'd be 200.
Yeah, you'd owe 100 in tax
Yeah.
and 100 in penalties and interest. So that's not unusual.
To try to keep the penalties and interest and all that crazy thing, if you could reform this, what would you change?
You're not going to expect this answer. The first thing I would reform is I would do away with our present system of the requirement of estimated tax payments. I'm not saying I wouldn't require estimated tax payments. I would say I would almost make them mandatory in some way. I would figure out some way to keep small business owners honest so that they would do more of a pay as you go.
And they wouldn't have that problem.
And they wouldn't, they wouldn't get into the trouble that they're in. And that kind of cuts against my personal political beliefs because I believe the government should be small and less invasive.
Right.
But on the other hand, we do have this huge percentage of small business owners that just don't get that they're supposed to be making estimated tax payments and they don't get how to do it that makes sense for them. And so they kind of need to be protected from themselves. And that sounds really kind of elitist. And I don't mean it that way. I just mean we need to have some better system that makes more sense so that people could pay as they go as, 1099 independent contractor, small business kind of people, because that's the biggest problem that I see. Then I see lots of other, stuff where people cash in 401ks to buy houses free and clear and just things that make you scratch your head and you're wondering, why did you do that? Like, really, like, who told you to do that? And inevitably they say, well, nobody told me to do it. I just did it.
Just thought it was a good idea.
Yeah. I thought, well, if I had to, my house is free and clear and I live in Florida, nobody can take it, right? Well, except for the federal government, so there's that.
Which doesn't often happen, but they can.
Yeah, it doesn't happen that often, but it can happen. So that's probably the thing that I would do. You kind of put me on the spot by saying.
I know, right? You were not expecting that question.
Well, I haven't even thought about it that much because I don't anticipate going into politics and I don't anticipate being tasked with fixing the mess that they've created. The human part of me would try to make, programs to make it easier to settle their tax debt. And then the business owner, / politician who's trying to balance a budget would probably be like, no, like go get the money,
Yeah.
So it's really hard to say what I would do in my present role. My role is to I almost said beat the IRS. My role is to help to help clients, figure out how to solve their problems in the manner that's most advantageous to them, which is usually the lowest amount, and move on. And I really like that role because people come into the office and they're torn up. They're emotional, they're upset, they've been worrying sometimes for years. And it feels good after that initial consultation. One of my big goals is to send people out that day feeling better or at least more informed than when they came in. Some people don't, but most people do, I would say.
That makes sense. All right. So the collection process. So once they actually get that notice they owe the money, that's when it starts?
Yeah, in a way. So the first notice you're going to get will be a letter that explains, what's the balance due and it demands payment in full. It's going to include the amount of the tax, penalties and interest, and give you a payoff date, basically. Then,
how long is that usually? 30 days or something?
No,
like
it's
that?
10 days.
10?
It's 10 days, which, is obviously not super realistic. And then what happens is the taxpayer, if he doesn't pay, let's just assume he's not, then you're going to go through a system or a series of automated letters. And they start out nicer and then they get scarier. Okay. So the first one or two, it used to be longer, by the way. There used to be like a 6-letter sequence that you could pretty much hang your hat on. So if you were on letter 1, you're like, we're fine. We got lots of time. Or people would come in and they just give you their latest collection letter, which is that's what we ask them to do. And that letter does tell me, like, where are we in this process? So you'll eventually get a letter called a CP 504. And that CP 504 comes certified mail. And it's kind of scary. The first time I got one just as a non-lawyer taxpayer, I was scared. I mean, it came certified mail. Only really good news or really bad news comes certified mail, typically. Right.
So what if they don't get it? Like, what if they're away or they're traveling or they avoid it? What if they just don't pick it up?
Well,
I'm sure that happens. Don't you think? Like, if they think they're getting a letter?
It does.
From the IRS, they avoid it and go, oh, I didn't get it.
And what happens is the IRS, the law says that the IRS has to send the letter to the last known address. And what's the last known address? The last address on the last tax return filed.
Yeah.
So we live down here in Florida, super transient kind of place. I mean, I forget how you would know. How much does our population grow every day or every month?
Oh my gosh, it's ridiculous. I used to keep up with this, but I don't. But it's a lot. And I can tell you just the reload clients that we work with alone is probably 25% of our population.
So these folks come down from Indiana, Iowa, Michigan, Ohio,
Denver,
all those places. Yeah. And
Alabama.
And they don't necessarily, file a change of address with the IRS. They might put a forwarding order in their last address, although a lot of people don't, which is kind of also one of those head scratching situations. But so if they don't get that letter, if they don't get the IRS letters, then it's not the IRS's fault. It's the taxpayer's fault for not having a last known address. Now, if they are filing returns, then it's usually not a big deal. The next return they file. So let's say they move from Denver to Florida. When they file their return with their Florida address, the IRS will update the address automatically and start sending the notices there. But
So they send it. It doesn't matter if you get it.
it doesn't matter
And
if
so
you get it.
our population is already at almost 20 million in 2014. So we're waiting on new census data soon. But you can see basically they track this with California, which is that they were at almost 39 million at that time, and it looks like I don't know. We probably jump 10 million people about every 5 to 10 years.
Wow.
The chart.
I'm glad I have my space,
Yes, you do.
Maybe I can sell it to somebody who wants to put a bunch of houses on it
At some point you may.
and move someplace else without so many people.
Okay.
But
So if it says CP 504 at the top, that's really bad.
no, if you get the letter, it's really scary because it says,
What does it
this
look
is our
like?
notice of intent to levy. It just has a bold headline, this is our intent to levy. And then if you read the smaller print, it says levy your state tax refunds. Well, in Florida, what does that mean? Nothing. It means nothing at all. We don't get state tax refunds. But if the people were coming from up north, or if they live up north and they live in a state with a state taxing system, then they can withhold or take that refund.
And levy is different than lien. Those get mixed up a lot, right? So levy is
A levy is a seizure, essentially, and a lien is notice to the world, usually filed at the clerk's office, that you owe the money to the IRS.
you owe money.
Absolutely.
All right. So when we come back, we'll talk about what happens after you get that CP 504 certified mail. And what next? We'll talk about the timeline that it takes usually to go through the collection process and a little bit more. If you have a question or you think that you owe taxes and you're starting to get some of these notices and you want to know what's next, we'll try and help you out. You can call us at 888-404-1010. That's our live studio call-in line because we are here today in Money Talk 1010, 888-404-1010. Pat George back there will take your call and pass you over to Darrin and I. We'll be back in just a minute. It's pretty right on time, though.
Yes, it is. You make sure to get a lot of air out of that song, out of that bumper for the next 3-4 shows, right?
I love it.
Welcome back to the IRS Solution Attorney Show. I am the IRS Solution Attorney, Darrin T. Mish.
And I'm your co-host, Katrina Maple. Thanks for sticking with us through the break. And today we're talking all about the IRS collection process. What happens and when and how long it takes.
And I need to listen to this today very closely
Oh,
because
no.
I think that I'm going to have to pay because I was a bad little boy and I cashed in some stocks so I could redo a kitchen and things like that. And I'm going to have to pay. Correct?
I don't know. Depends on your basis on the stock, right? Did you
Well-
make money on the stock?
Did I what?
Did you make money on the stock?
A little bit.
Well, then you only have to pay the tax on the difference between the basis and the sale.
Really?
Yeah.
I thought I had to pay no matter. You take the big lump sum out, you have to pay a tax on all that.
Well, is it
think-
in a retirement account?
Yeah, you think about a retirement
Yeah.
account.
Oh, well, okay. Well, you didn't say that part. Yeah.
Listen, see, this is exactly why when somebody asks the question, you get the attorney answer.
I know.
Yeah.
I gotta pay. I know.
And so if you were sitting in my office, we would ask you a whole bunch of questions before you even told me that.
And the thing is, though, and I have you guys here, and then I have, my stock show tomorrow with Flash and Michelle, and they say, take your money, you're going to lose it. Don't leave it in the stocks.
Well, that's
unless you
her
know-
take, right? Is the sky is falling a little bit? Like
Well, the thing
stock
is, she
market's
goes,
gonna crash and burn?
Don't leave it in there. So, and I go, well, if I invested in a kitchen, at least I have something to show. So I take it out and do that. So is that not good in your eyes?
Well, probably a different way to look at it is if you invested in the kitchen, then at least you got to enjoy the kitchen for the life of the kitchen,
Well,
right?
I'm working. I haven't enjoyed it yet.
But you will eventually.
Right. Yes.
So that's one lesson that my wife and I learned at our last house was instead of putting things off, someday we'll do, X, Y, Z. And we did it right before we sold.
Oh,
so
yeah.
that we
That
could,
happens all the
so that we
time.
could get the better price.
9 out of 10 sellers are like, yeah, I've been meaning to do this forever. And then they do it and then they sell the house. They don't even get to enjoy it.
And I think of that all the time, so that's why I'm just got to do it, and said the only way I'm going to do is I'm going to have to bite the bullet and pay the tax. And I haven't even started my taxes for this year yet.
You're running out of time, Pat.
I know.
It's already March 16th.
I know.
You can always go with IRS form number 4868 and just get an extension and kick that can down the road to October and it'll be all good.
I could also not even do anything and then in about a year come and see you.
Yeah, you might be able to do that.
Darrin does not encourage that, by the way.
So in the prior segment, we were talking about the letter CP504 that comes it comes certified mail to the taxpayer, and it's basically a scarier demand. It talks about levy. And most people, when they read it, myself included the first time I read it, are so sort of taken aback by this letter that they start to almost kind of semi-panic.
You're going to levy me already? It's only my third letter.
You start to semi-panic, and then they don't really read that it's only applicable to state tax refunds. But there's another really important thing that letter does. And what it does is it starts to accelerate and max out the penalties. So you're going to pay, I believe it's, I always screw this up. I think it's 5% per month to a maximum of 25%. In penalties after you get the CP 504. So it's really the thing. Don't worry about the exact amount that I just said. What you need to know is once you don't really want to get a CP 504 if you can help it, because it accelerates the penalties.
Well, how can you help it? If you don't have the money to pay, you don't have the money to pay.
Well, if you can enter into an installment agreement before that CP 504 gets issued, then you're not going to have those penalties quite as bad.
So what would somebody look like that? Like a non-attorney that doesn't know anything about this stuff, a lay person that owes $100,000 in taxes, they would just call the IRS and go, well, I filed my return. Sorry, I don't have the money. Can I make a payment arrangement with you?
Well, $100,000, that's kind of a rough fact pattern. I was thinking more like 10. Okay. So if you owe $10,000 and you can, afford to pay that over a 6-year period, then you call the IRS and you wait on hold for 2-3 hours. And eventually, if they don't give you the proverbial courtesy disconnect, which is when they disconnect you after you've waited for hours because they think that's better than taking your call, I guess. But if you can get through all the way.
Sorry, we're busy. Call back later.
Yeah, if you can get through all the way to somebody, you can probably get an installment agreement done on that $10,000 balance for like $200-$300
Well,
a
the
month.
Crazy part is like they put you on hold for a couple hours and hang up on you, but you can't even walk into a local IRS office anymore, right? Like, didn't we talk about this before?
Yeah, they call them IRS taxpayer assistance centers, and so in the interest of better efficiency and better customer service, they decided to eliminate all customer service at taxpayer assistance centers. This is your government at work, folks. This is really, it's like Orwellian, and I always think it's like Alice in Wonderland. This is how the government works. And I think I'm starting to see some changes, but the new administration's only been in for, 60 days or something. And I'm not saying that I'm a huge fan of the new administration necessarily.
Well, you won't know for a little while.
But the streamlining of government and the streamlining of government services would be a good idea, in my opinion. There is a lot of fraud, waste, and abuse, not only on citizens' sake, but also on the behalf of the government.
So if and when you can get through, because it can be a frustrating process, hold, and then work on a payment arrangement over how long typically will they give you to repay that?
Typically on my example, the $10,000, if it's relatively new, you just filed the return or so, or within a year or so, they're going to give you 6 years to pay that thing back. That's crazy. that's plenty of time.
Now, are they tacking on penalties and interest during that if you got a payment plan?
They are going to tack on penalties and interest, but the penalties and interest won't be as severe as if you waited until you got the CP 504.
What type of interest do they charge anyway? Do you know?
Right now, I believe it's 3%, but it's compounded daily, and so the effective rate is a little bit higher than that. And then there's also interest on the penalties too. So it's, it can be significant. The rule of thumb, as we stated before, was it's going to double every 6 to 7 years, something like that.
You said they give you 6 years?
Mm-hmm.
So I'm just running kind of my general AM schedule, which I know is not right if they're compounding the interest daily and adding penalties. But if you had $10,000 and you amortize that at 3% over 2 months, it's only a $28 payment. I know it's more than that.
Well...
Oh, wait. Was that years? No. 72 months.
Again, you're famous
No, I
for
have it
putting
wrong.
me on the spot.
No, I put the wrong number in there.
No, the way
6 years, so 151. That makes sense.
The way my math would work is I would propose about $150 monthly payment in that case. And they might say, well, no, we can't do 150, but we can do 153 or whatever. And it'd probably work out. That's in a really simple case where you owe $10,000 and you can obviously afford the $150 a month. It's not really that big a deal other than the time invested to get that installment agreement.
Ultimately, it can cost them a lot more in the end, right?
And I don't tell a lot of people this, but there is a way to get an installment agreement online now. It's called an online payment agreement application. You basically Google IRS online installment agreement, and there's a screen, and you go through the screen, and you can propose an installment agreement if you're not way deep into collections. And a lot of times that will work as well. There's also a form where you can request an installment agreement just by mail. It's called the Form 9465. It just changed this past week Haven't even looked to see what the changes are, but it changed, and you can send that in by mail. That's kind of a neat little trick for a couple of reasons. One is it's going to take them because it's mail, right? It's not the most efficient thing. It's going to take them 90 days or 120 days to get back with you to say okay or no. And technically, under, I believe it's, I'm going to quote some code here, IRC 6331K, the request for an installment agreement actually prevents further collection action.
So they have to stop?
They have to stop. So that's kind of cool. We do that sometimes.
So I wonder how often they actually lose that request.
Well, I would suggest that if you send that in, that 9465 by mail, you send it in certified mail. It's
versus online?
Well, online's okay. You're going to get an instant answer online. So, your installment agreement application online was pending for 5 seconds, and then it was rejected or accepted. The thing about the online application is if it's rejected, you don't get your appeal rights, versus if it's through the mail, it's going to say, well, we're rejecting it and you have appeal rights. Or sometimes they'll say, well, we couldn't take your $149 proposal, but we can take $167 and your first payment starts on.
How do they figure out what that number is going to be?
It's the math that we just talked about.
Okay.
It's
they figure out what they'll owe with penalties and interest at the end of that 6 years, and they calculate it backwards.
It's not really that precise because the interest rates change when the Fed changes their interest rate and all that kind of stuff.
Which will happen, by the way, this year.
Yeah, it looks like, right?
It will happen.
The Fed is going to change.
I'd bet money on it.
But that's not necessarily a bad thing. It's also an indicator the economy is humming along, so that's good.
Yes.
So one of the things that I wanted to talk about was that if you do owe the IRS money, you might want to consider other sources of funds rather than getting an installment agreement from the IRS. Because if you do the installment agreement from the IRS, it's much like borrowing from the IRS.
From a bank.
Your so-called interest rate from the IRS. Yeah, it's only 3% compounded daily, which is terrible. And there's interest and penalties, so the effective interest rate is much higher. It might make more sense to either put that on a credit card,
ouch,
or but if you have good credit and you have zero, you can do balance transfers and you have 0%, that makes perfect sense.
I would never do that personally, but okay.
Yeah, but you're like a Dave Ramsey disciple,
yes,
right? So
I am.
But I don't think that Dave Ramsey would preach, oh yeah, you should borrow the money from the government and you should pay all those interest and penalties.
He doesn't think you should borrow any money at all from anyone ever.
Yeah, which is my problem with the guy, because if you never borrow any money for anything ever, then you can never leverage
I just
at all.
don't know that I would put it on a credit card. I think that I would, if anything, do like a home equity line of credit, and I'm not really.
Yeah, that could be great.
Just because at least you'll get the interest deduction, or you should.
Well, let me give you a scenario where
But I wouldn't make it a habit.
Yeah, you should certainly not make it a habit. I mean, that's as bad a habit as using your credit card to go out and buy vacations that you never pay for and that kind of thing. But let me give you a scenario where I think it would make sense. You owe $10,000, and it's kind of a one-off thing. Doesn't happen all the time. It's just like a one-off thing, and you have the potential to put that on a 0% balance transfer for 18 months or something. And you're like, yeah, I can totally knock this out in 18 months. So the total cost of that money was whatever the balance transfer fee. Let's say it's $300. I mean, that's a no-brainer in my mind.
Isn't the problem, though, that at the end of that time period, do they accrue all the interest or just your balance? I don't even know.
You mean if you don't full pay?
Like
no,
it's just the balance. Whole thing, just whatever the balance is.
Just whatever the balance is. And then typically, if your credit's good enough, you've got 0% balance transfer, you're going to get a bunch more in the mail, and you just bounce it back and forth.
So I guess you could knock it out. Using your example, if it was $10,000, no interest, over 18 months, you'd have to make a $555 payment and change every month to knock that out within that time.
Or you could pay $150 a month for 6 years.
Yeah, that makes sense.
I mean, I'm not saying that that's the right thing to do for everyone. I'm just saying you got to kind of think outside the box a little bit. You can't just go, oh, well, I'm always going to be on a
people, and this is just me, to sell something. You need to sell something paid off. You owe $10,000 and you can't afford it and you didn't save it. Sell some stuff.
I talk to a lot of people, and we talk to slightly different kinds of people. I know you meet a lot of people too, and your people that are buying houses are in pretty good shape credit-wise, probably mostly.
I'm on the ELP list too, so we get...
And my folks are not. So my folks probably don't have something they can sell to pay off their tax debt. Okay. Especially because my average client's tax debt is in the hundreds
that makes
of thousands.
Sense. All right, so they can sell their house, maybe, but they still would owe some money.
Usually not.
Yeah.
Because usually they don't have hundreds of thousands of dollars worth of equity.
Well, we had fun. The conversation went sideways, as always. So when we come back, we're going to zip through the rest of the IRS collection process. And then Darrin has an exciting train wreck of the week. If you've never caught this part of the show, stick around, because when we come back, it's very exciting. Darrin will talk about a customer that he represented, what their total tax debt was, and how they wiped it out. Stick around. You're listening to the IRS Solution Attorney Show, and we'll be back in just a minute.
Suffering from IRS problems? Do you owe back taxes you can't pay? Is your paycheck or bank account being levied? Or maybe you haven't filed tax returns in years and simply don't know what to do. This is Darrin T. Mish to tell you that if you're tired of IRS problems hanging over your head and are ready for a fresh start, we may be able to help. Call the law offices of Darrin T. Mish at 888-GET-MISH, 888-GET-MISH. I can help you file old tax returns, work to release tax liens or stop wage levies, even negotiate deals to pay off back taxes at a discount, sometimes for pennies on the dollar. Hey, let's face it, these days it's not hard to get into tax trouble. A divorce, failed business, health problems, you name it. The point is, IRS problems may be solved if you're willing to take the first step. Call for a free consultation at 888-GET-MISH. That's 888-438-6474. Or go to the web at getirshelp.com, because the one sure thing is, IRS problems don't solve themselves. So get Mish. 888-438-6474. Principal Office, Tampa.
I can't even understand the lyrics. What?
Tried and you failed, you can't afford it now.
Oh, you can't afford it
It's
now.
the accent of the singers. It took me a while. And then when you saw me smile, I finally got it.
Says you.
I know. I
bought
saw
it-
you smile, and I'm like, I guess I'm slow or late to the party because I didn't get it.
You bought it and you want to pay later and you can't afford it now. Uh-oh.
Welcome back to the IRS Solution Attorney Show.
In trouble.
That's Darrin Mish, and I'm Katrina Madewell, your co-host.
And today we were just talking about the IRS collection process and kind of how it works. We talked about there's a certain letter called a CP 504, starts to accelerate your penalties and whatnot. And we talked a little bit about the different types of installment agreements. If you owe over $50,000, and it looks like that might raise to $80,000 here coming soon, it's a little bit easier to get into an installment agreement. If you owe over $50,000, it's actually pretty hard. And they want you to pay what's your monthly disposable income, and your monthly disposable income is typically a pretty big number.
They want more information.
Yeah, they want a bunch more information, and they want to delve a little bit deeper into your finances, actually a lot deeper into your finances to determine, what's the minimum acceptable payment that they would take.
Why you owe them $80,000?
And then there's a couple other options for people that we'll go over real quick. One would be an offer of compromise. That's where you make a deal to settle for less with the IRS. We don't have really time to talk about that too much today, but it's based upon your monthly disposable income and the value of your assets.
And we have talked about it a lot, so you could pick that show up on a podcast.
Yeah, for sure. It's called the IRS Solution Attorney Podcast. And you could also sometimes have your case be placed in hardship status, or also known as currently not collectible. If the IRS puts your case in hardship status, that would mean that they don't expect you to pay anything presently on a monthly basis, but it does not solve the problem. It is not a solution to the problem unless the statute of limitations, which is 10 years, has drawn very near. So let's say you get put in hardship status with 6 months left on the statute of limitations. Well, you haven't won today, but in 6 months, you're going to win because it's going to expire.
And it's interesting. Like, I never know what these are going to do, but we actually have a customer that's in the process of buying a house, and I had referred them to Darrin, and they owe this money, and we told them to call the IRS and see what they say. And they said it's not collectible, and it's old, and they've gotten tax refunds for the last couple of years.
And I think what the IRS said is technically true. It is not collectible because the statute of limitations has expired. What they didn't say was the next thing, which was it's not collectible because it's expired, it's unenforceable, and you're entitled to a release of that lien. They didn't say that. Now, there's been some big news in the last week, and that is that these tax liens are going to start coming off of people's credit reports. They're going to stop impacting credit scores. Did you hear that?
No, I did not, but that would be a great show for Tampa Home Talk.
And I'm not really sure what the rationale is, but I think it's going to be a good thing.
Well, think about that. If you owe tax money, we were just talking about borrowing it in the last segment. You can't borrow it against your house if you're showing a tax lien.
Yeah, what we don't know is if the tax liens are still going to cause underwriters to fail to write loans.
Well, if it doesn't show up on public records and on your credit report, they probably won't catch it.
It will show up on public records, but it won't impact your score. So who knows what that means?
Yeah, but they will not do it unless you're paying it off. They might make an exception.
Okay, so this is that train wreck sound means that it is time for my favorite segment of the show, the IRS train wreck of the week. And this is the segment of the show where we talk about somebody who came into the office and their situation was just kind of like a train wreck. They owed a bunch of money and it was just a mess and they didn't know what to do. And we got down to business after they hired us, and we hopefully made it all better. In this case, the gentleman's really interesting guy. I really like him a lot. He's from Maine, and I don't know if you've ever met anybody from Maine, but they're really stoic. They're very emotionless. I think it must be the weather. It's just really harsh, and so they're never really happy. They're always kind of slightly unhappy. And
the sun doesn't come out much there,
and that's just kind of the deal. And this gentleman, we went through a bunch of trouble actually, where. At first, we thought this was a case where he wasn't going to owe a lot of tax, and then ultimately, we figured out the position that he wanted to take was not really valid, and so we filed the returns, and he ended up owing about $147,000. And we filed an offer in compromise in March of 2016, and like most offers, it just kind of sat around for about a year, and eventually I got a call from a lady, and when she wrote it up, I mean, we answered all her questions and stuff. When she wrote it up as a full pay. She had taken some erroneous positions and she wrote it up that he didn't get an offer. And so I met with the client and we filed an appeal with the IRS appeals. And I get this letter from appeals scheduling the conference. And the letter is really weird. It says pretty much you lose, but if you want to talk to me on the phone, here's your date and time. So that I didn't really like that letter, obviously, because I didn't think I lost. I hadn't lost, and I just didn't think it was real professional. So I get on the phone with the lady, and the conversation kind of goes like this. She's like, well, Mr. Mish, you lose. You lose, you lose, you lose. And this is a waste of time. And I was kind of taken aback. At first, I didn't know how to deal with it, and then I got kind of mad. But you can't get mad at them because that's not going to help anybody. And so I very politely asked to speak to the supervisor, and she knew what the issue was. And about an hour later, I got a call back from the same lady who told me I was, she was really rude. Wrong. And she goes, yeah, I talked to my supervisor, and you need to get me this, and this, documentation-wise, and we're going to relook at this thing. Long story short, yesterday, I got the call. They were going to settle that case for $6,346. You owed $147,000, and now they're going to settle for $6,346. The issue was any expenditure that a taxpayer makes that is necessary for the production of income is an allowable expense. Does that make sense?
Yeah.
If
it costs you that money to run that business, you take it as a deduction.
And the issue was he had a rental house, and they wanted to count the rental income coming in as income, but they didn't want to count the mortgage payment or the property taxes or the insurance or the utilities or anything as expenditures going out. That made no sense. That's completely unfair. It's inequitable. And ultimately we won that.
Can we take Mark's question really quick?
Really quick.
Mark,
Mark?
what's your question? Where'd he go, Pat? Hi, Mark. Real quick. You're on air, and we only have less than a minute. What's your question?
Hi, am I on the air?
You're on.
All right. I've got a quick question about, I have a very simple tax return. It don't even itemize, nothing like that, but went through Chapter 7 bankruptcy in 2016. How will that impact my filing for this upcoming April?
I really don't think it will impact your filing at all. Just go ahead and file your return as per normal, and I don't think it'll have any impact whatsoever. What were you thinking?
Do I have to make any kind of indication on my filing?
Are you worried about the canceled debt?
Yeah.
Oh, the cancellation of debt is actually an exception. Bankruptcy is an exception, so you don't have to do anything. If you have a 1099-C that was actually, that debt was canceled or discharged in the bankruptcy, you have to file a Form 982 and check the box that you went through a Title 11 case, which is a bankruptcy.
Okay. Unfortunately, it's still not completed yet, so I don't have that 1099-C. I don't have that, so
you probably never get one. Mark, you'll probably never get one because you went through bankruptcy.
We appreciate your call. Hold on just a minute. Darren's going to finish up with you. We got 4 seconds. So this week,
we're out.